All right, my name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk a little bit about cost segregation. So I've been hearing that term a lot and it's very popular amongst real estate investors. And I wanted to talk about circumstances that you can use it as a real estate investor, then also give some tips on actually getting a cost segregation done. So I'm going to get into a little bit about just the concept of it for those that might not be familiar with it, and then give you some pointers. A quick primer as far as what it is. Cost segregation is essentially when you upgrade or you want to do big repairs on a piece of property or some sort of renovations. Normally, you take the total cost of those renovations and you add it to the cost of the property, or it sits on its own if you're renting. And if it's a house or a residential home, you depreciate that over the course of 27 and a half years. If it's a commercial space, you depreciate that over 39 years. So as you see, it's a very long time. What cost segregation does, it takes those same costs and get as much of that cost as you can into other items, mainly equipment or fixtures. And if you can segregate the cost of those that were part of equipment as a part of that property, you can depreciate it a bit faster because equipment or fixtures can be depreciated faster. So for example, fixtures, so say a sink, can be depreciated over 7 years. So the idea is that instead of lumping that cost into an overall cost of the renovation, where it may take 27 and a half or 39 years to write it off, you now take the cost of that sink and any other things that you can classify as a fixture that might be a part of the renovation. You bring that into an asset class, fixtures, such as fixtures, where you can now depreciate that cost and have that write-off over 7 years versus 39 years. And then once you classify your expenditures as equipment, they're now eligible for Section 179 and bonus depreciation, where you can just write off the whole thing in year one. So that's the practice of moving your costs from being deducted over a period of 39 years versus being able to deduct it in 7 years, 5 years, sometimes even 1 year. So by doing cost segregation successfully, it will allow you to have a larger write-offs in earlier years. And if done properly, you can get a big write-off in the year that you spend the money on the reservations. It can be quite beneficial to you. Instances where you can use them. They work well if you're in a short-term rental business, your Airbnbs, your Verbos, it'll work well for that. Because if you experience losses, you can offset that against some of your other income. It might not work as well for longer term rentals, only because there are limitations as far as losses that you can incur. It can create a loss, but you have to carry them over. I had explained this in another video before. If you make over 150K in your other income earning activities, you can't deduct any losses you may have from your long-term rentals against any of your other income. So that's pretty limiting. But another area which is overlooked a lot, or you don't hear a lot of folks talk about, is in the commercial space. So let's say that you own a property that you operate your business in. It's the same thing. So if you have a number of improvements to that property, normally those improvements are either depreciated over the course of 39 years if you own the building, and even if you don't own the building, you rent the building. If you have a number of improvements, you have a business and you're building it out, whether it be a restaurant, salon, if you're renting a space, there's normally a build out process. You spend a lot of money getting the place right for your business use. That is another scenario where you can practice cost segregation, because those renovations normally are deducted over 15 years. And the practice is to try to bring some of those costs into shorter spanned assets where you can deduct it in 7 or even 1. So with this phenomenon, there are a number of companies that offer cost segregation analysis. I've heard quotes where it could be a couple grand, and I think there are some companies out there that do it remotely for a couple $100. So the cost can vary wildly depending upon who you're dealing with, but it can cost you a few dollars. But there's one way to avoid having to pay a company to come in to do it, especially if you are in the current year. If you're spending the money now and you just want to make sure that you properly record it to take advantage of the cost segregation, Now, one way around this is to do it yourself by getting detailed invoices of the work. So when you are having the work quoted from contractors, rather than a contractor just sending you an invoice and saying, here's the round number, here's what's going to cost for you to do renovations for XYZ, have those contractors send you a detailed invoice. You want them to break down what the labor costs are, what all the materials that they're going to use, and what the costs are. Have an itemized invoice and have it broken down by exactly what you are paying for, not just a round number. With the detailed invoices, this will serve as great evidence for your accountant to use when they're preparing your taxes to do the cost segregation. So the lesson here is you start getting these major renovations on your property and you get quotes, just get detailed quotes and then save those receipts or those invoices. That way, if you get challenged when you do your cost segregation, that should be more than enough evidence to support your claim. So it's very easy to do if you're in the initial year where you're spending the money. Might be a bit harder to do if you're trying to go back and do it from years prior. Then that might be a good time to get a cost segregation firm or analysis involved. It's a little more challenging, so you may want to use them for that. But in the initial year and going forward to really take advantage of it, detailed invoices. So that's all for now. So if you have any more questions about this topic or any other tax or accounting related questions, feel free to reach out and happy to help. That's all for now. I'll talk to you in the next one.